Government is raising the additional buyer's stamp duty on residential property purchases. Rates for second, third and subsequent homes, they will be increased by 5%. Now, the move aims to cool the property market and keep price increases in check. Now, joining us in the studio to share more insights on this, we have Khoo Swee-Yong. He's CEO of International Property Advisor.
Swee-Yong, thanks for joining us this evening.
Good evening.
Great to see you again. So a couple of days ago, we heard about those rising prices.
Yep.
And then we heard several warnings come out.
Yep.
And now, these property curbs. What do you make of this decision by the government?
All within the last 36 hours,
Exactly.
in fact. There have been analysts who are warning about possible government measures already. The fact that then the head of our central bank warned about it, and then today the CEO of our biggest bank also warned about it. And immediately at 7 p.m, news is released that we are going to be imposing this slew of measures. Rather punitive, relatively harsh, I think, and very broad, because it is not just the additional buyer stamp duty, it is also a duty that is added on for developers who are buying en bloc sales or buying land. Plus, there is a reduction on the loan-to-value limit for borrowing. So, meaning we want a more prudent real estate as well as a banking market, banking related to real estate, of course. And so, I guess the government is seeing that while prices haven't really reached the exuberance of the 2007-2008 residential market peak, we are probably sensing that due to maybe the trade spat, due to maybe rising interest rates, the volatility of the Sing dollar and SIBOR, that maybe with a cooling down of perhaps the jobs market, rentals are still not that strong, HDB resale prices being still somewhat weak, maybe it's time to let's go conservative on this. So introducing this set of measures, on the positive side, I think the prudent measures are good. On the negative side, I think foreigners might now view us with a little bit more, you're trying to attract foreigners here, aren't you? And yet, you're now penalizing me with even more stamp duty. And then if a foreign entity or investment fund were interested in our residential market, now I think they could dismiss the idea totally, because the stamp duty would be 25% extra on top of the 4%.
I suppose the fear here is that Singaporeans would be over-leveraged, isn't it, with those loans?
And therefore, the loan-to-value ratio limit will be dropped by 5%, meaning we have got to take out more equity upfront, more cash and more CPF upfront. And therefore, more buyers from tomorrow onwards will probably find it a little bit more difficult to buy the large size unit that they want. They may have to trim down their expectations. In fact, for some of these buyers, they may then swing over to the HDB resale market, because the curbs are not put onto the HDB market at all.
All right, so, punitive, harsh, as you've described these measures, but what about its impact on this red-hot en bloc market that we've been seeing in recent times?
I think developers would now be expecting to bargain a little bit more with properties that are still attractively located, but maybe with a very high asking price. There could be a bit more negotiations before the en bloc deals are struck, because now the developers will have to account for an additional 5% of expenses. And it is clear in the notes released today that the developers will have to pay that 5% immediately as the land deal is concluded. So on the en bloc side, I hope that then the en bloc sellers who are in process of now signing up, perhaps they could also temper their expectations a little bit. Otherwise, at the asking price that they want, with developers' concerns about the additional cost of 5%, plus developers are of course concerned about whether when they relaunch the property, could they get the new selling prices that they like. All that would be factored in.
Would you anticipate some of these en bloc negotiations that are ongoing now to actually fall through because of this?
There might be a couple of deals, which, especially those where the pricing is a little bit richer, which might fall through. Some of those that have been concluded and where the developers have paid above market prices for, perhaps the developers would have to redesign their promotional plans or even redesign the product offerings in order to make it attractive, such that when they launch, they could still get a healthy demand from the end buyers.
So this news obviously not so good for those looking to buy more properties, subsequent properties, but bargain hunters looking to upgrade, first-time buyers perhaps, that they could be looking at this and say, hey, prices are going to come down. How quickly do you think that's going to happen, if at all?
I think prices would probably react starting now, especially for somebody who is now trying to sell in order to buy, or maybe you have already purchased something and you're waiting to collect the keys. Now you're going to be selling it. There will be fewer buyers in the market because the loan-to-value ratio has also dropped, so they need to fork out more cash in order to buy your resale property. I think tomorrow we will see it reflected firstly in the stock market, and then in the expectations of the sellers in the market. I think slowly over the next 2 weeks, you will see sellers start to adjust their expectations down.
Swee Yong, thanks very much for shedding insight on this issue. We've been speaking there with Khoo Swee Yong, CEO of International Property Advisor.